Hello everyone, myself Deepak Gupta, and today in this session we will take up the topic government budget. So the word government budget, commonly known as union budget. First of all, as the word budget suggests, that it is a plan, it is a summary or estimated summary or plan of what will government receive and where will the government spend. So basically, unlike any business organization, it is not the profit and loss statement, but instead it is the statement of the total receipts and the payments which is made by the government in the coming financial year. So the financial year, or commonly known as accounting year, will be the period from 1st April to 31st March. So what the budget suggests that the year to start from 1st April needs to be planned, estimated that from where will the receipts for the government will come, known as the revenues, and where will the government spend those revenues to manage and develop the country. Therefore, before the period begins, that is in the month of February, and earlier the date effective for the February to place the budget was 28th, but now it has been changed to 1st of Feb. So on 1st of Feb of each accounting year, or I should say that on 1st Feb of each calendar year, government places an estimation of its revenues and the payments that it expects to come and go in the financial year starting from 1st April correspondingly. So therefore, if we have the period 1st April 22 to 31st March 23, which was the latest period for which the budget was placed, so we will say that the budget for the year 2022-2003 has been placed on 1st February 22. This budget will contain the summary of all the government revenues and the budget expenditures. So we can just ignore this word budget. Obviously, these are the expenditures, or we can say the word payment. And these revenues of the payments, as estimated, can have three scenarios that either the revenues will be equal to the payments, or the revenues may be more than the payments, or it can be a case where revenues are less than the payment. So when the revenues are more than the payments, then we use the word that it is a kind of surplus budget, where the surplus is used either on increased payments which were not budgeted, or they are carried forward for the next financial year to be spent in the coming financial year. The most common case in developing countries is this one, where the revenues are less than the payments. So government estimates that the revenues, though estimated, are less, but they believe that they will increase, and hence they will be able to cover most of the expenditures of the payment. And such kind of budget is known as deficit budget. So normally the developing countries have a deficit budget and the developed nations have a surplus budget. And if they both are equal, then we say that it is a kind of balanced budget, which is a rare circumstance where, or it is a estimation that whatever you will receive will only be spent and there will not be any shortfalls either on the revenue front or on the payment side, there will not be any excess. So basically, when this union budget is placed before the authorities, in India, this union budget is placed before the parliament, and both the sessions of the parliament, that is the Rajya Sabha and the Lok Sabha, or we can say the lower house and the upper house, has to endorse such budget before it comes into existence. So this union budget will be placed with the objective of attaining corporate, or I should say, sorry, uh, constitutional goals. So the primary focus economically of this budget is the reallocation of the resources. That is, each year government uh, checks the past performance of the usage of the resources, and if they believe that it needs any reallocation, then it needs to be done for such resources. Then equity is the basic parameter of Indian constitution, which says that there should be equal growth for all. So if there are any inequalities between the rich and the poor, that is, we believe that rich are getting more benefits and poor are not so, then we try to remove these inequalities in the budget placed before the parliament. Then every country will be politically and socially stable only if there is economic stability. That is, people are having all their needs fulfilled, at least the basic needs are fulfilled, and they are buying it at a price which they can afford. There is no out of control inflation or shortage of the goods, and that needs to be achieved through the parameter to be undertaken in the future activities, that is the budget. And therefore, to keep economic stability alive, and if it is unstable, then to bring it to a stable level is should be the one of the primary objectives of every budget. Then in addition, because India is not a capitalist economy, it is a mixed economy. That is, the work of the corporates, or I should say, the work of the firm as to the two sector economies, or government is not only an administrator of the country, it is also doing certain businesses in the form of public enterprise. So, various entities which are owned either solely or jointly to produce certain needs of the public and the country, and they needs to be managed, because if there is a mismanagement, then they will go in loss and they will hamper the economic stability of the country, and hence this management of the public enterprises has to be achieved through provisions in union budget. Then every economy obviously tries for growth, because stability does not mean that you are keeping your GDP stable. There has to be a growth in the GDP. You have to make more and more of the goods. So this GDP growth should be achieved, because that will bring economic viability for the country. So every budget should focus on the growth of the GDP. And last and not the least, this equality can be achieved demographically, that is person specific, or this can be achieved geographically, that is, there has to be a regional equity. That is, not just a few states, because India is a quasi-federal country consisting of approximately 28 states and 8 union territories. So it is not fair that only a few states get preference and they get all the allocations of the central government funds. So there has to be a regional equity to be maintained, and this regional equity is the key to bring peace and long-term stability in the country. The budget also tries to achieve this regional as well as demographic equity. So, keeping this objective in mind, government estimates the revenues. So, the government budget, known as the union budget, placed for the financial year starting from 1st April ending on 31st March, will obviously be having two parts. One will be the revenue budget and other will be the capital budget. And as the name suggests, this revenue shows that it has receipts and the expenditures which have an impact for a particular year, hence the word revenue. And as the word capital suggests, यहाँ जितनी भी रेवेन्यूज होंगी, जितने भी एक्सपेंडिचर्स होंगे, जितनी भी पेमेंट्स होंगी, उनका इम्पैक्ट मोर देन 1 year है. दैट इज, their impact is for multiple years, and hence we have this word capital. So this revenue budget is the match of revenue receipts and revenue payment. Similarly, this capital budget is the summary of capital receipts and capital payment. So we can say this way also, that the budget will have two parts, that is the revenues and the payments, as we started discussing. And these revenues can either be revenue receipts or they can be capital receipts. Similarly, there can be revenue payments and there can be capital payment. This is just another way of representing the above chart, that we can classify the budget either in the form of the revenue budget and the capital budget, or we can separate the revenue side and the payment side. So these receipts, whether they are, this revenue is receipts, because revenue and receipts are synonyms. So these revenue receipts are primarily of two kinds. Either they are tax revenues or they are non-tax revenue. Similarly, these capital receipts can be, because it is not a profit or loss statement, it is about the summary of what you're receiving. So there is no difference whether it is your income or whether it is a receipt of your loan or whether it is the repayment of the loan that you have received back. So therefore, these capital receipts will include the borrowings of the government, that is, if they have taken loan from any of the other governments or from the international bodies such as IMF and World Bank. It can be the recovery of loans, that is, whatever the loan you have given to other countries or to other bodies, they have been received back. And there can be other miscellaneous receipts which are of capital character. For example, if any stake of government is sold in any of the public enterprises, then such revenue, such receipts are capital receipts under the category other miscellaneous receipts. Similarly, we will have revenue payments. So before I move into this revenue payment, just a moment. So this revenue expenditure, also the payments also known as expenditure, they are primarily that such expenditures are incurred not to create any asset, and and not to write off any liability. So this is the basic difference. जिन पेमेंट से ना तो कोई असेट बन रहा है और ना कोई लायबिलिटी खत्म हो रही है, वो सारे के सारे पेमेंट्स एक्सपेंडिचर्स रेवेन्यू एक्सपेंडिचर्स हैं. और अगर वाइस वर्सा है, दैट such expenditures are made आइदर टू क्रिएट एन एसेट, यानी कि या तो इनसे कोई असेट क्रिएट होता है, और एनी लायबिलिटी इज पेड आउट। तो अगर कोई लायबिलिटी खत्म हो रही है या असेट क्रिएट हो रहा है तो वो पेमेंट्स कैपिटल पेमेंट्स है, और अगर बाकी सब पेमेंट जिनसे ना असेट खत्म हो रहा, ना असेट क्रिएट हो रहा, ना लायबिलिटी खत्म हो रही, दे विल बी रेवेन्यू पे। We again come to our revenue receipts and the receipts column before we move on further, that these tax revenues primarily will be of two kinds. Either they will be direct tax revenues, or they can be indirect tax revenue. So this direct tax revenue this direct tax revenue earlier used to be the tax on the income, that is the income tax, the tax on the wealth, that is the wealth tax, and the tax on the gifts made, that is the gifts tax. But with the period of time, the wealth tax provisions and the gift tax provisions are either waived off or included in the income tax act. So therefore, primarily we will have only one kind of direct tax revenue, that is revenue from the income tax, and this income tax revenue can either be collected from the corporates known as the corporate taxes, and from other non-corporate bodies known as non-corporate taxes, also known as personal taxes. And these collections of taxes can either be in the form of TDS oblique TCS, or in the form of advance tax, or in the form of self assessment tax. Similarly, when we talk of the word indirect tax revenues, so before I move again further, I believe that we understand the meaning of the word direct tax and indirect tax. And if not so, then if I just give a hint that in all these cases we are presuming that government is the collecting agency, or government is the destination where all taxes are going. And when government collects these taxes, then these taxes are levied on the public members. So the public member who are liable to pay tax are known as assessees. So basically, the tax is levied on an assessee. We use the word levy. So the tax is levied on an assessee and he pays the tax to the government. But sometimes what happens that when the government levy the tax on the assessee, then there is a third party who acts as a collector for the government. So instead, government changes the collection mechanism in the way that though the liability to pay tax arises on A, but it has to be paid to the government by this third person, and therefore this third person acquires the status of the assessee, and that person is another member of the public, commonly known as the consumer. So the funda comes into play in the manner, or the modus operandi for collection of such taxes is that every consumer who is buying any services or goods have to pay the price of such goods and the services, along with uh, inherent tax which has been levied on such commodity by the government. But because such commodities of the goods or the services are provided by this third person known as the vendor or the supplier, so government asks or makes this third person as the assessee and ask that person to collect the tax from the consumer on such value of the commodity or value of the supply. So this assessee is the supplier of goods and services to such consumer. So this consumer pays the price of the commodity plus the tax. And this tax as collected by the supplier, that is assessee, is paid to the government. So what is happening here? That is, though the tax is levied on the consumer, but it is paid by the assessee to the government. So in this case, the person who is being levied the tax pays the tax, and therefore it is the concept of direct tax. And in this case, the person who is levied the tax is not paying the tax to the government directly, but through the third person supplier, and therefore such tax is known as indirect tax. So indirect taxes in India were so many that in earlier times when the goods are manufactured, we had to pay excise duty. When the goods are sold, then we used to pay sales tax, which was further replaced by VAT. When the goods were imported into the country, then we use the word customs act or customs duty. When the goods were intangible, then we used to pay service tax. Or there were other taxes, for example, when you pay for any kind of entertainment, then there was entertainment tax. When you go to five-star hotel or any other such luxury items are consumed, then you tend to pay luxury tax. And there were so many indirect taxes. There were so many indirect taxes. But with the process of liberalization, globalization, and privatization, that is economic reforms, which started in the year 1991 and which are continuing till the year, but in the year 2017, the present government brought into existence the landmark GST, which waived off all such taxes except the customs and excise on certain items. And they all were replaced by the word, by the tax GST. So today, in today's scenario, the indirect taxes primarily will be either the GST and the custom. So when the goods are either imported into the country or exported out of the country, then we pay the customs duty, and within the parameters of the domestic territory of India, there is only one kind of indirect tax known as the GST. तो अगर आप नोटिस करेंगे तो इंडिया में मल्टीपल और मेजर टैक्स रिफॉर्म्स हुए हैं जहां मल्टीप्लिसिटी ऑफ द टैक्सेस हैव बीन वेव्ड ऑफ. So all kind of direct taxes have been unified into one tax, that is in income tax, and all kinds of indirect taxes have been unified into one tax, GST. So we can now proudly say that government receives one direct tax, that is income tax. Government receives one indirect tax, that is GST, and these two taxes are from the territory of the India. And then when the goods are taken in or taken out of the country, then we receive the customs duty. And in special cases, there can be some sort of excise, which is primarily on alcohol to the state government and on petroleum products, which is to the state as well as to the central government. So excise is specifically only for the central government remains on the petroleum products, and in all other cases, these all taxes have been unified into these three major, and they constitute the major tax revenue receipts for the government. Now, further revenues and the payments will be discussed in the future sessions on the same topic. And on this note, we close this session and we hope to see you again on our next session on the same topic. Thank you very much. Goodbye.